If you're a business owner, how you invest your money is different than most other people. And there are special kinds of accounts that you should look at using that are going to help you build your wealth over time in and outside of your business. So come along with me. Let's take a look at the 3 top accounts that you should be using if you own a business. The number one most powerful account you can use it as a business owner is something called a solo 401k. Now, this only works if the business is only you or you and your spouse. Despite that, it offers some serious benefits if you fit into it. First of all, you can contribute up to $24,500 per year of your own money. And you can do that in a Roth portion, or you can do that in a traditional portion. If it's Roth, it means you pay tax now, but you get tax-free growth. It's traditional, you get a tax deduction now, but you have to pay taxes later. So you can contribute up to $24,500 of your own money into this account and get that huge tax advantage. Then number 2, on top of that, you can contribute from the company, which again, if it's the solo 401k, it's just you or you and your spouse, up to a total of $72,000. Now this is limited by your income, so it has to be a max of 25% of your total income. So in order to get to the $72,000 mark, you would have to be making a few $100,000 a year in your business. But this allows you to have a much larger deduction in any given year, or a much larger Roth contribution than something like an IRA, which has a max contribution of only $8,000. Account number 1, solo 401k, it's going to save you a lot of taxes. The account number 2 is an HSA, and I like to call it a triple threat. So an HSA is a health savings account. You can only use this, and this is the one big caveat, you have to be on a high deductible health plan. This doesn't just mean that you literally have a high deductible. It's a specific legal definition that your deductibles have to be above a certain amount. And your plan will say whether or not it's high deductible. But if you're self-employed, chances are you're on an Affordable Care Act plan, and chances are you're looking at high deductible plans because they're so expensive. We look at this high deductible health plan with the HSA, and if you are married with a family, you can contribute up to $8,000, and you get a tax deduction on that $8,000. But it's almost like it's a combination of a Roth IRA and an IRA where you get the best of both worlds. So this can grow into whatever it may be. Let's say we just let it sit there and it grows to $100,000. And then later on in life, when you're retired, maybe you have some medical conditions, you can spend all of this down on medical expenses, and it's completely tax-free with the growth. This is extremely powerful, as I'm sure you can imagine, that you get a tax deduction up front and you get tax-free growth throughout the rest of your life. You might be saying, well, what if I don't end up having all of these medical expenses when I'm retired in many years? That doesn't necessarily mean you shouldn't use your HSA, because you can actually save your receipts from all of your medical expenses, let's say over the next 10 or 20 years, and then you can retroactively reimburse yourself from this amount after it's grown because it's invested in the markets. Account number 2, HSA, that's going to be really powerful for you, especially if you're a business owner. So the third one is a little bit more vanilla, but the taxable brokerage account is something that's heavily underused. There are a lot of businesses out there that have money just sitting in checking accounts or savings accounts, and we're talking amounts in the realm of $100,000 plus. And a lot of companies do this because they need to have some kind of cash reserve to pull from when expenses come up, and they like to have a buffer. Now, what a lot of people don't know is that if you just put this into a taxable brokerage account and invest it in something safe like a short-term bond fund, you'll have minimal fluctuation in value, so you don't have to worry about the stock market crashing. But you're also going to get a way higher return on your money than you would get from the checking and savings accounts. You can expect right now, with rates are where they're at, over 4% in bond funds like this, and still have it liquid and accessible for you as you need it. So that's why the taxable brokerage account, I would say, is probably the most underused of these three accounts to hold that extra cash you have sitting inside the business and make sure you're getting a return on it. So now you know the three accounts that you should definitely be looking at if you own your own business: a solo 401k, an HSA, and a taxable brokerage account. If you need any help opening any of these, or if you want any of these topics explained more in depth, feel free to give me a call. My contact information is down in the description. And I'd really appreciate it if you subscribed. We're putting out weekly finance content just like this video you watched today. Have a good one.